Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is September 29th, 2025, and we are taking a deep dive into one of the market's most watched stocks, Tesla, ticker symbol Tesla. There has been a whirlwind of news lately, creating a fascinating push and pull between bullish and bearish sentiment. So first we'll cover the headlines, and then we'll see how it all translates to the charts. Over the past few weeks, the bullish narrative has been incredibly strong. We've seen a wave of positive commentary from Wall Street, with analysts like Piper Sandler's Alexander Potter raising his price target to $500 and Baird's Ben Kallo upgrading the stock to a buy with a $548 target. Much of this optimism is being fueled by Tesla's aggressive push into artificial intelligence, with many believing the robotaxi and robotics ventures could justify a valuation marching towards $2 trillion. Positive forecasts for third-quarter vehicle deliveries have also added fuel to the fire, with some analysts expecting numbers to beat consensus estimates. However, the story isn't entirely one-sided. Just last week, the stock took a more than 4% hit in a single day on the back of some concerning data from Europe. Reports showed that Tesla's sales in the EU fell sharply in August, while Chinese competitor BYD actually outsold them for the second month in a row. This highlights a major headwind for Tesla. While the long-term AI vision is compelling, the near-term reality of slowing EV sales and rising competition is a genuine concern for investors. This creates the mixed sentiment we see in the market today, a classic battle between a speculative, high-growth future and present-day operational challenges. Now, let's see how this narrative plays out on the daily chart. Looking at the bigger picture, we can see Tesla has been on a roller coaster ride over the past year. The stock put in a 52-week high of nearly $489 back in December of 2024 before a steep correction that found a bottom around the $220 level in March of this year. Since that March low, the price has been in a general uptrend, marked by significant volatility. We had a strong run into July, a pullback into August, and then an absolutely explosive move higher throughout September. This recent surge correlates directly with the flood of positive analyst notes and the growing hype around AI that we just discussed. The price rocketed from around $330 in early September to over $440 just last week. That's a massive gain of over 30% in just a few weeks. Let's zoom in on that incredible move in mid-September. Here on the daily chart, from September 11th to September 15th, you can see the sheer power of that rally. The price gapped up significantly on the 12th and again on the 15th, moving from the $350s to over $420 with immense volume. This is a clear example of how positive news flow and a shift in market narrative can trigger a powerful buying frenzy. This area, particularly the gap between $396 and $423, will now act as a significant technical support zone on any potential pullbacks. After peaking around $444 last week, the stock has seen some selling pressure, which aligns with the news about slowing European sales and investors likely taking some profits off the table. This brings us to our key levels. The most critical overhead resistance is the 52-week high around the $480 to $490 zone. Breaking through this level would signal a continuation of the primary bull trend and could lead to new all-time highs. On the support side, the first key level to watch is the low from last week's pullback, right around the $419 to $425 area. A hold above this level would be constructive for the bulls in the short term. Below that, we have the major psychological level of $400, followed by the gap-up support area we just identified near $395. Now let's switch to the 1-hour chart to analyze the more recent price action. Here we can see the September rally in more detail, followed by the recent consolidation. The price has been making a series of higher lows since the dip on September 25th, which is a short-term bullish sign. However, it has struggled to break and hold above the $445 level, establishing this as a clear short-term resistance. The price is currently coiling in a range between roughly $425 and $445. A decisive break in either direction will likely dictate the next short-term trend. Finally, let's drill down to the 15-minute chart to see what happened during the last trading session on Friday, September 26th. The stock opened around $428, dipped to a low of $421, and then staged a very strong rally into the close, finishing near the high of the day at $440.40. This strong close on high volume suggests that buyers stepped in aggressively on the dip. This buying pressure into the end of the week gives a slight edge to the bulls heading into this week's trading. It shows a clear defense of that $421 support level we identified. So, let's bring it all together and recap what you need to be watching. From a bullish perspective, the long-term trend since March is up. The AI narrative is providing a powerful tailwind, and buyers showed up to defend support at the end of last week. From a bearish perspective, the stock is approaching major historical resistance, and the fundamental picture for near-term EV sales is showing some cracks. Here are the most important price levels. Major resistance is at the $480 to $490 zone. Immediate resistance is at the recent high of $445. Immediate support lies at the $420 to $425 level. Major support is at the psychological $400 mark and the September gap-up zone around $395. So, what are the predictions? The bullish scenario, which I see as having about a 60% probability, involves the price holding above $420. If it does, the positive sentiment could carry it to retest the $445 resistance and then make a push towards the major $480 resistance zone in the coming weeks. This scenario would be reinforced by a strong Q3 delivery report, which is the most significant upcoming catalyst. The bearish scenario, with about a 40% probability, would be triggered by a decisive break below the $420 support level. This could happen if the Q3 delivery numbers disappoint or if broader market weakness emerges. A break of $420 would open the door for a test of $400 and potentially a move to fill the gap down to $395. The key thing to watch for in the immediate future is that Q3 delivery report, which is expected very soon. Its outcome will likely be the catalyst that breaks the stock out of its current consolidation range. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and ring the bell so you don't miss our next video. Trade safe, and we'll see you next time.